Hello traders and welcome to another video review. Today is Thursday, October 20th, 2022. Let's take a look what Forex calendar have for us. All of the most important events are right now on this slide. As you can see on my screen, I have the employment change data from the Australia, published already. Very poor reading, 0.9 versus the 25 of the forecast. This is really big disappointment. It's way below the previous reading of 33.5. So we should expect some kind of a reaction on the Australian dollar. We have some interesting data from China published already. PboC of China loan prime rate was set at the same level, 3.65%. Will have an impact on the Australian dollar too. Whole day is the European Union Leaders Summit today, so as you can see, might be interesting to hear some remarks from the leaders. So please stay focused, be careful, because it looks like there might be some comments unexpected, as it usually is. And scheduled for 1 p.m. we got 1 week repo rate and overnight borrowing rate from Turkey. The market expects the 1 week repo rate to drop from 12% to 11%. For all of you Turkish lira traders, that's a very important event for today, of course. And during the New York session, we have Philadelphia Fed Manufacturing Index data and initial jobless claims scheduled for release at 2:30. Those data are from the US, of course. And at 4 p.m. we have existing home sales data from the US as well. We expect a drop from 4.8 million to 4.7 million. So pretty much interesting day today. So please stay focused and vigilant as usual. Let's start our technical part with Australian dollar. Daily time frame chart of the Australian dollar is clearly showing us the downtrend. The recent bounce to the level of 6,554 had been, of course, all retraced and the low was broken. So let's just take a look a little bit closer to the recent price action. The main zone, the main supply zone is located between 6,674, 6,715. So this level needs to be violated in order for the Australian dollar to move higher. However, we are still trading below 6,370. So this is the nearest technical resistance. Let me make it a little bit thicker, this line, so we know that this line is important. And of course, right now the market is trying to make another lower low. Please notice the fact that RSI is extremely oversold and it's basically moving very closely to the level of 30, and it's been doing this for extended period of time, which means this is a genuine downtrend. The recent pin bar made on the 13th of the October was firstly almost completely retraced. Then we have inside bar, then we have a attempt to break out, but it didn't even hit the nearest technical resistance, 6,370. We have a reversal to the downside, and today we will see how this data will actually trigger the session. We already made lower low, and if the down move extend, there is a possibility for a test of 6,175, which is the low of the pin bar. So please stay vigilant, stay very focused on the Australian dollar, because we might have some important moves. If, however, we have a breakout to the upside, the momentum to the upside might be strong as well, because we've been trading on this extremely oversold market conditions for some time right now, and the reaction to the upside might be severe. So that was the Australian dollar, right? Let's take a look at the US dollar to the Turkish lira. Yeah, so the Turkish lira is here because of the interest rate decision that should decrease the level of the repo rate from 12% to 11%. So as you can see, this is of course the bank intervention. We went down, and since then all of this intervention was violated. The level of 18.35 was broken. Now it's 18.57. Extremely oversold market, overbought market conditions, of course. Why? This is why this market is still going up. This is 30-day moving average, as you can see, works pretty well, and we are trading above this moving average. And as long as the interest rates will be hold on these elevated levels, the Turkish lira will fly higher, will move higher, and the next psychological level for the Turkish lira is of course the level of 20. So should we see any central bank intervention around these levels, we might see this kind of a intervention. However, there is nothing on the media yet, and the market participants await the interest rate decision for today. Maybe there will be something different. Maybe the central bank have something different in mind than reducing the repo rate from 12 to 11%. We will see. Stay vigilant, please. US dollar, of course, to the Swiss franc today. We are going to take a look at this pair because of the data. And what do we have here? Perfect behavior of the ABC pattern. Let me just make it a little bit more visible here for you guys. So what do we have here? ABC to the upside, and as you can see, our target for the technical resistance has been hit. All we need is a 100% hit, 9,978, parity level hit, technical resistance hit 1.0051, and even we have a breakout higher, margin high 1.0072. However, the target for the wave C in form of the Fibonacci projection is located at 1.0113. So this is 1.0113. Okay, so we can still extend our rally towards this level. And if we take a look here at the context and what is behind this move here, it's not maybe dramatic, but please notice the fact that first time we tried to break above the parity level, market reversed. Second time we tried to break above the parity level, market reversed. Third time didn't happen. New swing low, and then A, B and C to the upside, and it looks like we are staying above the parity level, which is another reason why the market of US dollar to the Swiss franc should move higher towards our potential target 127% at 1.0113. So that's the US dollar to the Swiss franc. Let me just take a look at one very important commodity, which is crude oil. Because why? Because let me just zoom in. You will see why. Look at this. We've been talking about it, about potential wave B to the downside. The first level was 86.71. This was the first level for the bounce. Then there was the second level and third level, 84.92. Didn't happen. There was no bounce from any of this level because the market chose to bounce from 61% of the Fibonacci retracement, 82.90, and this is the valid low for the for the crude oil right now. So what we should expect? We should expect a bounce. We should expect a bounce towards at least 100% of the extension, because the 100% of the extension is above the supply zone, which has been tested many times before, so it cannot actually be violated. So we should expect here a rally towards this level. So let me put an arrow here. We should expect a rally towards this level, but the test of 99.26 should be made like in spikes. Yeah, so there should be spike up and then massive sell-off, because ABC to the upside should be completed by then. So this is how it looks like right now. The outlook remains bullish. We have a bullish engulfing here on a daily time frame chart, 61% hit. So please notice the fact that one more wave to the upside is needed to complete this rally. Okay, so first supply zone, we might end up there, because it's not about the Fibonacci projection, it's more about the technical levels first, and then of course if there will be extension to the upside towards 99.26, we should see a spike up and then reversal. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.